next speaker is ready to come up on stage. Now, I want to just say that I've got incredible respect for Scott. By the way, you'll notice something about all our speakers. They've all done a lot of personal development training for themselves. Scott, like myself and Brian, is a huge fan of Tony Robbins. He's been to many of Tony's events. I don't know how many of you been to? I don't know. Do you know how many you've been to, Scott? 4. He's been to 4 of Tony's events live. 2 in Fiji. And you need to know that to go to Tony is not cheap. He's done lots of personal growth, personal development. The reason why I'm sharing this is that Scott, like myself and Brian, has a hunger for personal growth and personal development. And I think we met in 2008 when Scott did my Mind Power course, and he came and spoke to me. I think it was 2008, Scott, you need to start doing webinars. It only took me about 8 years to listen to the message, Scott, so it took me a while. He was a bit ahead of his time, because he was saying, Bob, you need to get more people. Webinars is how you're going to reach more people. You reach people that you can't reach in townships, people who really need this information. I'm like, yeah, I'm busy. And I listened then. Do you think my business, had I listened to his advice then, do you think my business would be in a different place today? Well, I'd be very different. It's taken me a while, but at least I'm listening. So, Scott's passion is people. He lives in, I think in Neisner. Is it Neisner? He lives in Neisner. It's a terrible life, terrible. And he sent me a video yesterday, the bastard, showing me, oh Rob, every day I do my 20-minute process, and he'll probably tell you, so I won't say too much about it, my 20-minute process. And today I'm doing it on the water, and I thought I'd just show you a video of where I am. Safari. And he says, I feel so blessed to live this amazing life, looking forward to being with you in the group tomorrow. So he is living and demonstrating what he teaches. What I also appreciated is, you know, the fires that they had in Neisner earlier this year. He actually sent an email to his entire database, and I can't remember, he'll probably tell you how much money they raised. And he personally gave a lot of his wealth to make a difference in people's lives. So he's really committed to helping the people who can't help themselves. And today what he wants to speak to you is about, his system is called Migrate. I honestly don't know too much about it. All I know is I've spent quite a bit of time with Scott, and he's authentic, he's real, and he really wants to make a difference. Please, ladies and gentlemen, are we going to give him, because he doesn't know, are we going to give him a Lucas Mangope? Are we going to give him money? So please give me help. Ladies and gentlemen, please give me help and welcome. He's come all the way.
See, I actually have a timer in the front here so that I can keep time. So, like Robin said, I absolutely love the space, I love the energy. I've followed Tony Robbins for 20 years. I would highly recommend doing Date with Destiny. It's the greatest thing I've ever done. And you know, doing Mind Power with Robin 8 years ago made a massive difference in my life. But what is really interesting is that while you were all dancing and behaving like you were with massages, someone came to me and said, I was told the more people dance, the poorer they are. So my challenge to all of you is we've got to prove that wrong. Is that fair? Okay, let's rock and roll. So I want to start with can I get the PowerPoint up, please? I want to start with a little story, and it's the 1st of August 2005. I'm in London, I've lived there for 9 years, and I get a telephone call, and it's my mother. And unfortunately, my father has passed away. So it's pretty hard when you're overseas and you've got to get home. Anyway, I jump on an airplane. My mates are amazing getting me home. And when I get home, lying next to my dad's bed, I literally find a bank slip for 50 Rand, and he got declined the day before. Now guys, that's not the way the story's supposed to end. For someone that went to school, university, became a chartered accountant, you know those very clever people that invest and give free accounts to? a financial director of Rainbow Chickens, a listed institution. He semi-retired at 49, and 10 years later he died bankrupt. Now, what happened? Well, unfortunately, he very much stuck to the old way of doing it, what I call the 20th century traditional way. And the bottom line is he trusted the financial industry with his money. So I started very differently. That's me and my dad. That's me at 13, that's my dad. And this was my very first project, property project. I was 13 years old, and I didn't want to share with my brother anymore, so I persuaded my parents that we should extend the house. And this was a double bedroom, ensuite bathroom. And I know that my dad, would have made sure there was a good architect and accountant and, a quantity surveyor and builder. But in my mind, I did that first project myself. But I learned at a very young age that I absolutely love to build things, and particularly property. What was interesting is that I also loved a game. Who here enjoys the game of Monopoly? Who would like to play Monopoly in real life? The third thing that's interesting is that not too far from here, we live in a country where the wealth gap is disgusting. And unfortunately, I love it when I go to England and America and they talk about their devastating wealth gap, and the people that are on the wrong side of the wealth gap have a house with a satellite dish. But my point being is that all around the world, this wealth gap is either going to destroy this planet or we're going to solve the problem. But while we continue to believe that the 1% can protect their wealth away from the 99%, it is not going to work. But what most people think, even in this country, is that you need to take away from the 1%. It's not about that. It's about empowering the 99%. So when you look here, I went and studied this many, many years ago. 49% of the world's wealth is held in property. You can love me, you can hate me, you can argue with me, but you can't fight with the facts. 49% of the world's wealth is held in property, and yet only 12.9% of the world's population has access to property. So we talk a lot about land rights here in this country, and we think it's just a South African problem. What's fascinating is of that 12.9%, many of you probably have heard this before, but in England, Australia, and America, less than 1% of people at the age of 65 are going to retire wealthy. Now guys, that is ridiculous. Because everyone is working hard, going to school, going to university, paying their taxes, paying their retirement, and yet less than 1% of us are achieving the result. You've got to admit that the system's broken. So what's interesting is that we decided to use technology to empower the 99%. We decided to make investing as simple as a swipe of a finger, and we decided to make it from as little as $1. Now why $1? All over the world, people think that $1 is a waste of time. But living here in this country, $1 won't change your life. But come to what Brian Walsh said, $1 will change your habits. And if you change your habits, you'll change your financial destiny. So we believe that we need to get it to $1, not so that we can help every person in this room, because with all due respect, you paid to be here, but it's to help the people that served us lunch today. Imagine the impact we can have then. So that's the why that we do. Now, there's a great book. Who here has read Tony Robbins' book, his latest book on money and making money, mastering money, etc.? Yeah, a couple of people. For those of you who haven't, his first book came out, and it was about 700 pages long. It was far too long for me. The latest book's come out, it's an abbreviated version. Okay? And I literally condensed the entire book into one slide. Would you like to see it? Yeah. Let's start with a little story first. So, there was this young boy, and he grew up in Durban. And, what's that? And this young boy basically used to go every year up and watch the comrades up and down. And it was a major thing. I came from a place called Kloof, if anyone wants to know where that is. And anyway, so, I don't know what age it was 5, 6, 7 years old. I decided that I would run comrades one day, as most German people say they will. What I didn't realize was that I was going to grow up to be a fat little hooker. And so, when I got to about 22 years old, I thought, I might have to now do this comrades thing. And luckily my brother was a doctor, and he was actually, he went to go see Tim Noakes, and I said to my brother, just ask him about this comrades thing. He said, no, don't do it until you're 30. Like, it's not good for your body until you're 30. So I was like, okay, great. 30, like, when you're 22, 30 is like 100 years away, okay? And anyway, in 2008, I turned 30, and the day arrived, and I'd been playing semi-professional rugby at the time. I thought I was pretty fit. And so I thought, well, it's time to do the comrades. Signed up. Everyone tells you what to do and blah, 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 but I just did it. I did a couple of runs. I ran a marathon here in Joburg, actually, to qualify. And anyway, a great day arrived, and I set off. And the first 5 or 10 kilometers, I honestly thought I was going to smash Bruce Fordyce's record. I was going full steam ahead, okay? And this was the up run. It was from Durban to Mosman. Anyway, by the time I hit Kersney College, which, if you do or don't know, is about 29 kilometers, that's the school I went to, by the way, I started cramping. Proper. I've got serious mind power, mind over matter. I managed to go on for another 32 Ks. But by the time I hit Cato Ridge, I was finished. I was literally cramping in both calves, both quads, my hammies and my stomach all at the same time. And I couldn't get from here to those flowers. Now, when you're someone that's, probably every single person in this room, when you come to these type of courses, like, you pride yourself on the power of your mind. And when your body lets you down, like, that's a major thing. I don't know if anyone else has experienced that, but it's not a fun thing, okay? So now I have the decision, like, do I give up, which is just like, not in my life, you don't do that. But the problem was, if I kept going, I might have to go on that bus, that bus of shame? Like, we have to, everyone goes like, oh, shame. So I was about to go over the highway, the N3, and I thought to myself, well, if I bail now, like, I could go down and phone my wife, and she can come pick me up on the highway. That was actually worse. Standing on the highway and you're running gear and people are going past. It's pretty obvious that you weren't like, at gym or something. So, anyway, the next year I came back, I did it very differently. I found someone that had actually run the race before, maybe got a bit of strategy. I found actually a dietitian, I lived here in Joburg here, and I found a dietitian that literally gave me a little pill, like a little salt pill that you literally put under your tongue, and that, like, solved the cramps. And the guy that I modeled gave me a strategy, and it was actually if you run, you'll know what I'm talking about. It's a 7-minute run, 1-minute walk strategy. And even in the first kilometer, if you want to beat Bruce Fordyce's record, you stick to the strategy. Makes sense? And the third thing that was interesting is that when I started running the next year, it was now the down run, around 30, 40 Ks, I actually started cramping. You know when it's coming? Like, it didn't actually cramp, but you know it's coming. But the difference was this time, with the experience, I was able to avoid the cramps. And I finished the race. I got my medal. So, but guys, if you're from Durban, like, if you don't get an up and a down, it doesn't count. So I got my down medal, but now I still got to do the up. So the next year I got married, and it was the 2010 World Cup, so I couldn't do the up anyway. 2011, it's time to do the up. And again, I remind you, strategy, having some sort of system or procedure to help yourself, some sort of method, and then most importantly, having the determination to continue towards your goal. My goal was to get an up and a down. And in 2011, I actually finished the comrades again. And if you can see this time here, it's 11 hours, 55 minutes and 36 seconds. Which, for Robin and what Brian said, that is incredible time management. That is 4.5 minutes that I left before they shut the race down. The guys, I got my 2 medals. And what's the moral of the story? Why am I telling you this story? Because I find when people talk about money, they switch off. They mentally go, you can do it, but I can't. So I want to share with you a story about running, because every single one of you have done some sort of walking or running. And today there's really going to be 3 things I'm going to share with you. The one is that don't just go out there and run. Like, you need to get someone that's been there, done that, got the t-shirt before. So as Tony Robbins and Shaw Robin, go find someone that's already well and copy what they're doing. Like, there's a system, a formula that works. And it doesn't change. You know the dot-com boom bust? Like, the fundamentals of business, real estate, investing, the stock market, they don't change. Technology improves them, they don't change. So the first thing is make sure that you've got a strategy. Okay? The second thing is, like that little pill that I put under my tongue, what type of system are you going to use? Like if you just randomly ad hoc run out there and good luck, like you need systems to help you win. Is that fair? You know, towards what Brian said, in business that's monitoring and tracking. Like are you getting better or worse? It's obviously exactly the same in finances. And then the third thing, and probably the most important thing, is that you have a burning desire to succeed no matter what. Because you're going to fail. So let's just get that off the table. Like you're going to make, if you go into business, you're going to fail. And if you go into property investing, you're going to fail. So let's not stop worrying about it, it's going to happen. Now I know you're all sitting there going, what the hell have I just wasted the weekend for? But the point is, if you know something's going to happen, stop worrying about it. Like I tried to explain to my wife when we got married, I said, babe, like at an event, something always goes wrong. So it's going to happen, so stop worrying about it, and when it happens, we'll deal with it. Does that make sense? Like, so for me, it's the same. Like, it's going to happen. But if you've got that burning desire, like you know what you want to achieve, like I guarantee you can get there. Is that fair enough? So let's get into some of these lessons. Now, one thing before I get started. I call today a workshop. What does a workshop mean? Pardon? I can't believe you got that right. That's exactly what I was thinking a while ago. It's I work and you guys shop. But on a serious note, I'm a different way guy, so I look nice now. I can't wear a jacket, like this is too jungle for me. But no, let's look at this book. Let's look at these 4 principles. So the very first one is don't lose your money. Okay, it's really interesting because Warren Buffett like goes on and on and on about this. The second one is asymmetric risk reward. Now, some of you will know what that is, some of you won't. In simple terms, who here has heard the higher the risk, the higher the return? Who believes the term? That's complete rubbish. Okay, because asymmetric, the wealthiest people in the world look for the best reward with the lowest risk. Tax efficiency. Robin was just talking about some of the ways to do that. And then the fourth one is diversification. So now it's quite interesting, okay? All of you, well some of you, you're not all from Joburg, but if you own 3 houses in Joburg, are you diversified? If you own a house in Joburg and a flat in Cape Town, are you diversified? Yes? Getting better. Okay? If you own shares on the stock market and you own shares in a REIT, so for those of you who don't know what a REIT is, it's a real estate investment trust, it's a property fund. So if you own shares on the stock market and you own investments in a REIT, are you diversified? Are you? So wouldn't you be surprised to find out that a REIT has a higher than 70% correlation to the stock market? Are you diversified? So what's interesting is that a lot of us think we're diversified, you know, but we need to be diversified across asset classes, within asset classes, across markets and currencies, and across time. Now let me give you a statement quickly. So there's the book that I was recommending, Unshakable, by Tony Robbins. It's a very, very good book. The only thing I don't like about the book is it's for Americans. So the principles don't change, but when he talks about how to be tax efficient, it's American. Is that fair? So Ray Dalio is one of the 50 wealthiest men in the world, and he literally says all you have to do to be wealthy is you need 15 uncorrelated bets, an array of attractive assets that don't move in tandem, and by doing this it will reduce your risk by 80% and increase your risk-return ratio by a factor of 5. Should we all go home now? You've got it. So what I'd like you to do is just turn to the person next to you and try and decipher what that actually means in English. Does anyone want to share? Does anyone want to share? Anyone want to give it a go? No? Need an expert? Fair enough. Spread your risk. Yeah, anyone else? Okay, right, so let's just do a quick show of hands. Who completely understands what that's saying? Who thinks that that must be like only for seriously wealthy people? And who has no idea either way? So guys, let's decipher this into English, okay? One of the comments that I always get is that, you know, yeah, but this is only for wealthy people. Because what this actually says is that you need 15 uncorrelated bets. Now, I don't like the word bet, so let's think investment. Is that fair? With an array of attractive assets, so that could be a house, it could be investing in the stock market, just all business, that don't move in tandem. So you need assets that actually move in, like effectively could move in opposite directions. And by doing just those three things, you will reduce your risk by 80%, and your risk-return ratios, that means the risk is reducing and the return is increasing, will increase by a factor of 5. Now that's not 5%, that's 500%. So now the question is, if you want to buy a house in Johannesburg, and you want to invest on the stock market, and you want to buy a commercial property, and you want to invest overseas, that's only 4 investments. Can you see why until technology turned up, it wasn't available to you and me? Because just the house is probably most of your money if you've got a house. Is that fair? So let's look at how technology can help us change this. The reason that most people, you know, like to come and learn about this sort of stuff is they like to get information, they like to learn about how they can make their money work harder, hedge the rand, preserve assets and wealth, have peace of mind. You know, it's really interesting. I made a video, like Robin said, and you know, just yesterday we got downgraded. Does anyone know that? Who's terrified? Like, do you get terrified when you read that? It does really worry me. I'm really deeply concerned for our country. But I'm very, very grateful that me and my family are global citizens and own overseas assets with first world income. And I choose to live in South Africa. There's a very big difference between having to do something. And by the way, I'm ex-Zimbabwe and I have 3 farms, and the new minister says I might get them back, but anyway, we'll see. So you've got immigration options, best investment. I don't believe you have to immigrate anymore. I fundamentally believe that your money can live not where you live, which actually means you can financially immigrate, and you can live in our beautiful country. It's my opinion, that's why I live in Nasdaq, not Joburg, sorry. Political instability, economic climate, how the system works, a very big one. Who here would like to know, by the close of play today, how to send your children to any university you want in the world? I didn't say South Africa, I said in the world. Yeah? So for me, I'm a UCT boy, very proud of it. Not like not like others, I go there. So my point being is that was it last year or 2 years ago, the UCT students said that gravity doesn't exist. Like it's a race thing. Like my son was no longer going to a South African university. Because there are laws of nature that don't change. Okay. You know, you want to be with like-minded people, and most importantly, I believe, you want to become a global citizen. So let's look at the different investment types. And I'm only standing back here because I don't want to put my back to you, but you've got bank products, you've got financial products, you've got bonds, you've got stocks, you've got REITs funds and syndication, which, like I said to you, are like property funds. And then you've got direct property in residential, and you've got direct property in commercial. Now, to be honest, guys, I actually probably should add a new one there. There's cryptocurrencies as well. But what I'm trying to point out is there's probably another 100 I could add to that list. Today, I have no idea how to talk about the top 4. 0. I very strongly believe that if you're going to be good at something, you master it. I've been doing this since I was 13. And that's all I know about. So don't ask me about stocks or bonds or anything else. Okay, like that's what Anne and the other guys can answer. That's their expertise. We are going to focus today on the bottom 3, which is all about property. Is that fair enough? And if you don't understand, you know, I interchange between property and real estate because real estate is the global language for property. So what I'm about to share with you now is probably the most powerful lesson I learned in property, and yet it's the simplest. This is so simple that when you look at it, you're going to literally think it sounds too good to be true. Is that fair enough? So, how did I learn this? Well, over the last, I started a business in, so I did my first property property I showed you when I was 13. I did my first property development when I was 19. I did my first London property when I was 24. And in 25, I started a business called International Property Solutions. And we've to date helped over at least 3,000 people invest in England, Australia, America, and South Africa. So why I did that, it's very similar to what Brian was talking about. You get the ability to watch what wealthy people do. Is that fair? Do you see, like, not only you make your own mistakes, but you're learning from others. So guys, the current real estate system is broken. You are the investor over there, and that is the investment. Can anyone tell me how many middlemen there are on average between you the investor, and your investment? How many? 13? It's close. 16. And every single one of them likes to charge a little fee. So, and I'm being very kind, only putting up 4. Most people don't trust the system. Just in case you want to trust the system, flying up on the plane this morning, there's a story here about some scam where they gave money to the estate agents and lawyers. Here, property scam, more victims, couple taken by fake agent. Pardon?
Bloody agent?
What was that?
It's a Julius Malema thing. Bloody agent?
There's no transparency. And because of the high fees, there's actually very low returns. So before I go any further, who here thinks that buying a house is a good investment? Who here thinks it's not a good investment? That's interesting, a couple of the back. Who has no idea? So look at what I'm about to show you. So the real estate value chain really starts here. It's land zoning. So for you, most of you have watched Migrate. Like, you remember it used to just be a big farm, and then literally the guys at Atterbury went and got all the planning permission. Then basically Atterbury turns up, and they do a development. So whether it's the Mall of Africa or a house, it doesn't matter, it's a development. Then the investor comes along. So that's someone that buys the shopping centre and basically fills it up. So they get tenants in. Now that tenant can be a commercial tenant, or it can be a residential tenant. It doesn't matter, it's still a tenant, it's an income stream. Then comes along a fund or a REIT, and then comes us. Now what's interesting when you look at the returns, and I get argued about this all the time, these are the targeted returns that people are looking for all over the world, not just in South Africa, all over the world. Whether they achieve them or not is a separate conversation. This is what they're trying to achieve, based on the risk they believe they're taking. So a land developer is aiming for an internal rate of return of 30%. Just quickly, do I need to explain internal rate of return? Yes? Yes. Okay. So guys, I often get asked, like, if you're going to use language like IRR, like, why don't you dumb it down? I've got 2 options. We can dumb it down, or we can teach you what wealthy people, how they analyze investments. So our attitude is we're not going to dumb it down. So we would, you know, the typical thing people will talk about is ROI, which is very simple. Like, if I've got 100 Rand and I've made 10 Rand, my ROI is 10%. Does that make sense? The problem is it doesn't take into value, time value of money and a whole bunch of other things. So the internal rate of return takes into account 27 variables. And in simple terms, it's your money and what return are you making on your money over time, taking into account inflation and everything else. It's the best metric to compare an apple with an apple. Okay, just so we're all on the same page. I could spend an hour on internal rate of return, but for now, let's just take it as a metric. So they're looking for 30%, the developer's looking for 25%, the investor is looking for 20%. Do you know that a REIT or a fund is looking for 5 to 8%? Can anyone tell me why? When you go and invest in a pension scheme, what does that pension scheme promise to pay you? Pardon? Yeah, cash flow. Cash flow. That basically, you're paying them and they promise to pay you cash flow, right or wrong. So why is it a fund, a REIT, a pension scheme, they're buying cash flow? That's what they want. They want assets that have a stable income that can pay your monthly cash flow. And then you come along you and me, by the way, come along, and we wonder why we battle to beat inflation. Now, just my interest, before I go on, does anyone disagree with what I've just said? Again, I'd love to have a debate. Does it make sense, or is there something fundamentally wrong with what I just said? Can you see why 99% of the people don't retire wealthy? Now, what's interesting is, if I'm talking complete rubbish, this is an article which we can send you afterwards. It's on my LinkedIn, so just go and look it up on my LinkedIn. And this is literally two South African companies. This is Business Day, I think you'll all recognize them. So Robosis is a developer here in Johannesburg, believe it or not. And it literally built a whole bunch of shopping centers, and then it sold it to the Billion Group. And what was really interesting is that they were the same person. But what was really interesting is that in this article, and I know you can't see it up here, and that's not the intention, is that in this article, they talk about how they haven't even stabilized the rents yet. So how can, like you and I, be expected to invest in these assets? You know why it happens? Because, remember the value chain? That guy is making money, that guy's making money, and the payday, the most money I've seen in property ever made, is when that guy sells it to a fund or a REIT. So, this is the whole article that's all about it. So, the question I've got for people is, well, if that's so obvious, why are you guys investing there and not here or there? Why not? Money? No mechanism? Knowledge? Trust? Accessibility? Monopoly? You see, for me it sounds very like Uber. You know, because before Uber came along, that was the Taxi Owners Association, and you had to get on your phone and you would phone the Taxi Owners Association, and they would phone the guy that owns the car, who would phone the guy that was in the car, and then, you know, and then they would give the address, and then probably about an hour or two later they would come and pick you up. But if they didn't pick you up, you phoned them, you phoned him, 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 and then you wondered why it was one of the most inefficient, costly, and really frustrating industries out there. So, what's fascinating for us is that we just asked the question, we said, well, why can't we just use technology to help people invest here and there? And so the barriers that we brought up, and some of you shouted them out, and that's fantastic. You know, the one that I didn't hear, it sounds too good to be true. This is for other people. Too much compliance, too many scams, too difficult. What about ongoing management? Who likes dealing with management companies in this country? Like broken toilets and hassle, hassle, hassle. It's much easier just to give your money to someone else, right? Because of the hassle. I don't have time, need structures, local real estate agents, blah, blah. So the principles of investing are actually not that complicated. You need to understand the macro and microeconomic factors. So you need to understand, is it good to invest in South Africa right now, yes or no? Then you've got to decide, is it better to invest in Johannesburg or Cape Town? I'm just giving you two examples, and let's say one's better than the other. Then you've got to look at the location of the property. You know, there's obviously good locations and there's bad locations. You've got to do the whole due diligence. You've got to understand the risks. So remember what I said about don't lose money? The most important thing is understand the risks. Then you want to choose your partners. What I find fascinating in property is that most people think that they invest in property. Do you know you're wrong? You invest in people. People will help you make money. Even if it's your management agent, even if you're doing it yourself, you're still investing in people. So coming back to what Brian said, business is about investing in people. So the better you get at choosing your partners, the better you'll get at your results. Tax compliance, bank accounts and structures, managing your asset. So again, most people think that buying a property is the job. I hate to tell you that buying it's only 20%. 80% is what, again, in technical terms, they call sweat the asset. It's like make the asset work, like make money. And then the thing that most people don't even think about is what's the exit. So remember, you know, whether it's right or wrong with Robosis to Billion, they had a plan. Like their exit was build the assets, sell them on to Billion. Does it make sense? That's how you make real money, when you already know what your exit plan is. And what people is that they don't just have one exit plan. They've got like 3 exit plans, and obviously you have a best case, medium case, and worst case, but they've got exit plans. So, I love this statement by Nelson Mandela: money won't create success, the freedom to make it will. I want to share with you a story, and this story really for me epitomizes what we're doing here, because we literally decided to create two solutions. One is our income solution, where people can invest in real buildings. I can't get to a wall, but this is a real building. Like someone is paying rent. Robin is paying rent for this building today. It's a real existing building with an existing cash flow. Can you see that? That's what we call an income building. And then you've got a growth building, which is a new development. Like, you know, the ones with cranes. Now that doesn't have an income, and if someone is paying you an income, it's a pyramid scheme, because it has no income. Like, think about it logically. Okay. So, where this all came about, and where this simplicity came about, was in 2009, having helped about 2,500 people buy houses and apartments, including myself, that owned houses in 4 continents, so England, Australia, America, and South Africa. I came across 2 very wealthy people, actually here from Pretoria. I was in Bondi Beach in Sydney, and what was fascinating to me was that we were right in the heart of the crash. Remember 2009? A lot of people have got very murky memories around that, but you know the markets move in cycles as well, and the next one's coming. But what's interesting is that in 2009, I remember talking to these 2, they're billionaires, okay? And I just said, what are you investing in? And they said, medical centers. I remember thinking to myself, medical? Like, why medical? Like, I've helped all those people I just told you, and I'm buying houses. No one ever told me about medical. Like, so then he said to me, he said, well, think about it. No matter what happens in the economy, people need doctors. I'm like, that's fair enough. Secondly, doctors never leave their premises. So like, I thought about it. I went back to like my childhood, and like my doctor unfortunately has passed on, but the premises are still there. And then the third thing is that the doctors are incredibly good at being doctors, but they're not accountants. So they sign very good long-term favorable leases. Now in Property 101, if you've got a tenant that is, you know, economically resilient, that stays there forever and pays good rent, like that is gold. Make sense? So how many of you invest in medical buildings? I'm not joking. Now you can see the frustration I had at the time. Like, it's so common sense. But the financial industry continues to tell us that we're all too stupid to make our own decisions, and that we need advisors to tell us what to do. I think it is complete, am I allowed to say this wrong, bullshit.
I never say
like, no, but I really do, because do you see how common sense that little story was? So anyways, I said, well, how do I participate? And they said, no problem. It's just for friends and family. It's $5 million Australian dollars. Okay, I understand the problem. So there were 8 people that invested in that deal, on that whole portfolio deal. That company today is listed on the Australian Stock Exchange and is worth $700 million. You work out that return, and that's since 2009. Now what really irritates me is that's what financial exclusion is. Because I wanted to participate. Okay, but yet I couldn't. So we decided to do one better. We decided to build technology to allow people to participate. So when we launched the platform in 2013, the minimum investment was $100,000. Now the reason we did that was due to regulation, in simple terms. It's all down to sophisticated investors. As the regulation became more technology orientated, and as the platform got better, we got it down to $10,000. Then we got it down to $1,000. We now have it at 1,000 Rand, which you could argue is $100. And we're well on our way to $1. We're not there yet. Now guys, I think that it's pretty awesome that every single one of you in this room, because I guarantee you every person in this room can put 1,000 Rand into investment, means that every single one of you can now participate in that deal that I just told you about today. So it's really quite interesting, because it's kind of common sense that the technology and platforms are going to just revolutionize the space. So what's interesting is that there are literally platforms all over the world, 250 of them plus to when we last checked. So it's all these ones in America, like none of you can invest in any of them because you don't have a social security number. This one, is England, you've got Dubai, you've got China, you've got Australia. So what's interesting is that, I love Uber, okay? I basically don't drive anywhere anymore. I literally don't drive anywhere other than my boat. And And, no, but I'm serious, like, it's so unproductive. Like, why couldn't I sit in an Uber? It's so much more productive. So, but when I go to different countries, and in the last 3 weeks I was presenting in Davos 2 weeks ago, I was in Brisbane last week, and I'm here with you today. And we said, well, we need an Uber solution. Like, who wants to have a platform for your American investments, a platform for your English investments, a platform for your Dubai investments, a platform for your South African investments? Like, you've then got like 4 different platforms. It's like having Snapchat, Facebook, LinkedIn, Twitter. So we decided to build a platform that everyone could participate in. There's clearly some interest in it. We've now got investors from, members from 107 countries around the world. There's only 193 on the planet. And we've got investors from 46 countries. So that basically means people have taken their money out of their pocket and invested in deals. We've won a whole lot of awards. I don't know if it's a good thing anymore to say we won the KPMG award, but it was a global KPMG award, I will just point out. I know the Gupta's person. But the thing that, what's interesting is we've had just short of $66 million go through the platform now. And the thing that I'm proudest of on behalf of the team is that the reinvestment rate is higher than 70%. What that means is that the people participate, they dip their toe, and then they want to get started. So you see in the old world, you know, I wanted to come here and I wanted to try and find someone that wanted to invest $1 million. I just wanted to have one relationship with that one person. I'm actually far more interested in getting every single one of you to start with $100, dip your toe, and build from there. Does that make sense? So let's just look at it. Like, it's really simple. You basically got the best property providers in England, Australia, America, and South Africa. And you've got us, the global investors. And in simple terms, all that our platform does is allow the investors to get access to the best partners and to partner with them in the deals. Can you see how in that value chain we've cut out all the middlemen? We asked ourselves a question. We said, how can we make global real estate investing easy? Now let's be honest, guys, when you think of real estate, you know, I think of management, maintenance, broken toilets, emails, hassle, hassle, hassle. And that's just local investment. Who owns an overseas property? It's interesting, quite a few people in the room, okay? Now you start talking tax, compliance, structures, like it is, I mean, just opening a bank account is nigh on impossible. So what was interesting is that we wanted people just to be able to focus on the best returns, and literally in a couple of minutes they can get access to the best partners, the best opportunities, and they can invest from $1,000. And I've told you, where you're lucky in South Africa is we actually beta testing 1,000 Rand. So we're doing it in South Africa, nowhere else. It's 1,000 Rand, because we want to get it down as quickly as we can. So let me show you quickly, because anyone can put a nice PowerPoint together. So I'm now live. I'm just going to log in. I'm going to log straight into my own account. This is when we hope the internet works. Okay, so we're basically logging in. So where we're logging into now is effectively the back end. It's my portfolio. And you can see, so this is my wife and I's portfolio. I can go into my funded investments. I can go into any one of my projects that I've invested in. This is just a medical building that I invested in America. You can go in, you can get the investment summary, I can get all the project updates. If I click on any of these reports, I can go in and, where's it gone? There. I can get full summary breakdown of all the financials. Our 3 core values are trust, transparency, and alignment. So anyone that looks at the normal financial industry reports, would you agree that it's like 36 pages and you've got no idea how they're making money? Yes or no? Our thing is simplicity. You know, if we made 10 Rand and the cost was 2 Rand, the return is 8 Rand. Like, that's what it is, you know. If I go back here, you can literally, so I can go down to fund my wallet. Anyone ever tried to open a bank account overseas? Who owns Bitcoin in the room? Bitcoin's been on a bit of a run in the last 12 months. One thing that I would suggest at a wealth event is, my uncle told me a long time ago, sometimes take some of the chips off the table. You can basically fund your wallet through a EFT, through Paygate, which is a credit card, or through BitPay, using your Bitcoin. this is something we're beta testing. Actually, next week, Roger Hamilton is here. I think Brian is there as well. And this is his entrepreneurial zone. We're actually beta testing a buy-sell option. So the question everyone's going to always ask me is, how do I get out of it? We're building, there we are. It's beta testing a buy-sell. But the most important reason, what is the one reason, let's be honest, that would stop you from investing? Not with me, with anyone else. There's one word. Trust. 100% right. You win the toaster for the day. But it's honestly trust. So how do you solve trust? Well, there's two things for us. There's the old world industry, which is the regulated industry, you know, like a regulated stock exchange. So what we did is we decided to make it easy. So I can go into any of my investments here, and let me just go down and open this one here. So it's one of my medical buildings. And so my wife and I invested, what was that, 50,000. You can see the fees that we paid, you can see the taxes that we paid. And what's interesting is that this is the tracking number at the top here, there. And I can literally, like with that, I can go on to Bloomberg and actually see that my investment is listed. So don't trust me, trust the financial industry. Or, who in the room knows blockchain? So there's quite a few hands actually, I'm quite impressed. Guys, do you want to just write that word down, blockchain? Blockchain. Okay, so for those of you who don't know what blockchain is, imagine that it is November 1995, and I'm Jeff Bezos, and I'm standing on stage, and I'm saying to you, guys, the internet's coming, and it's going to disrupt all your businesses. And he was laughed out the room. And in 2017, we've all seen the impact of the internet. I categorically promise you that blockchain will have a bigger impact on your life, your business, and your wealth than the internet itself. Think about what I just said there. And has the internet changed your life a little bit? I suggest start learning about blockchain. So, what's interesting, who in the room has actually seen live blockchain? So a lot of us have heard theory. We've got one person, 2 people, 3 people, 4 people, 5, 6. We've got 6 people in the room that have seen live blockchain. So the future of business is blockchain. And why? Because basically what's happened is you've got social media over here, and you've got e-commerce over here. How do we trust each other to invest? How do you and me buy and sell your house without anyone else? It's called social commerce. It sits right in the middle. And the foundation of social commerce is blockchain. So what's interesting is that the people in the front here, when I asked you, and I think I asked you about investing, and you know, most people have like complete fear when they think, oh, I'm going to invest, how do I trust people? Well, what's interesting is that you can now click on the blockchain. So remember my investment, I can click on it, and you can actually go in, just while it's opening up, and you can see it's all live, like we're literally on the internet. So I'm not going to bore you with all the details, like this is all the coding and stuff, but this is your hashtag value at the top here. And you can see that number there, 56,850? So imagine like your deed of sale. You know your deed of sale? Like, how long does it take to buy a house here in South Africa?
3 months.
It's an awesome experience, huh?
If you're lucky.
So what's interesting is that they take your deed of sale and a whole bunch of middlemen get involved, and then it goes to the deeds office, and they officially like transfer the ownership from someone else to you, and they give the money, your money, to them, and you now own the house. It takes about 3 months, huh? So what's interesting is this here is now registered on 56,850 computers around the world. If you hack one computer, it doesn't matter. If you hack 50,000 computers, it doesn't matter. It's irrefutable and cannot be broken. It's also decentralized. So there's no bank, there's no SARS, there's no deeds office, there's no human being, there's no PayPal or Facebook. But what's interesting is that I now go in, so I can see, this is like my digital deeds office, this is my like digital deed certificate, but let's say I want to go for a little walk into the digital deeds office. I can now go in, and you can see that BlockCipher is actually built on Bitcoin, and I can literally go in and see that it's but it only actually needs 6 confirmations. How many did mine have? 50,000. So that's like going to, what's the one here in South Africa, like Leapfrog or private property, and actually seeing that I own my house. The only difference is that to buy and sell that house took 3 months with a lot of expense. Do you know how long it takes on blockchain? 7 minutes. I'll let that one sink in for a little bit. If anyone's an estate agent in the room, I suggest you start looking at this. So, now you can see why the theory is becoming possible. Because can you now see, this gentleman and I have never met each other, and this lady, we can now buy and sell stuff. And you know that when I give you money, it's real. And I know that when you give me the product, I know it's real. And the transfer of ownership happens simultaneously, without a middleman. Which is why people can now invest in minutes with the best partners, the best opportunities. And at the moment, it's $1,000 in England, Australia, and America. It's 1,000 Rand in South Africa. And mark my words, we'll get it to $1. I guarantee it. All will die. So guys, there's 4 simple steps. You sign up, depending on what country you're in, you sign up in a compliant way. You literally go and choose your investment. So please understand, if the FSB is in the room, we do not give financial advice. I fundamentally believe, and I'm going to show you just now, that the current financial industry, fund managers, fail 96% of the time to beat the market average, just the average. So how could I be arrogant to stand here and tell you that I know more for you, what is better for you, than you know for yourself? So let's be clear. The responsibility is not passing from you to me. The opportunities are there, and you get to choose. You get to transact online, and you get to manage the entire place, the whole portfolio in one place. So now, do you want to invest in America? I love America. I hate Trump. What do I do? I love England, but worried about Brexit. I love Australia, but worried about whatever, there's too many ex-South Africans there. Even Cape Town, and previously we all had to choose, where do I invest? What do I do? And unfortunately, most of us had to bet the farmhouse. Like if I had 100,000 Rand or dollars, both are a lot of money to some people. Like, that's all I could do. Like, it was that house and that house only. So what's fascinating for us is that I wrote a book, it came out in 2014. Clem Santa actually endorsed the book. You guys know who Clem Santa is, huh? So I wrote this book, and I got so frustrated with people losing money when they invested in property that I pretty much wrote a book so that people could make better decisions for themselves. It was a system. And the book came out, and Clem Santa very kindly endorsed it because it was based on his scenario planning, which I'll show you now. But unfortunately, the only person who read the book was my mother. Because just like in Uber, none of you care how the algorithms work behind the scenes. All you care about is the fact that the car turns up, it picks you up, it takes you from A to B in a safe way, and then when they take money off your credit card, it's what you agreed was the right amount of money. Yes or no? Yes. And you know what's really cool? When you leave your cell phone behind, you can get hold of it, they can actually come back and give it back to you. So what was interesting for me is that we decided that the book probably wasn't going to work. Why don't we just rather build a system? So this is the back-end system. And I'm not going to bore you. I can stand here for 3 hours and explain this stuff to you. But in the same way with Uber, you don't actually care how Uber works. You just want to know it works. In simple terms, guys, there's 10 different layers. It takes into account currency, macro country, financial structuring, partners, micro cities, so which cities, the whole yield, the due diligence, the ongoing management, etc., etc. Let's put it into simple English. Helps people know where to invest, when to invest, what to invest in, who to invest, and most importantly, how to invest. Now, what's interesting is that, again, I'm not telling you what to do, but I'm giving you the systems to help make the right decisions for yourself. Now, for those of you who didn't think that, so this is all built on blockchain as well. For those of you who didn't think that blockchain is a big thing, I'd highly recommend you watch this next 2-minute video.
This is the seller. This is the buyer. This is the middleman. Cutting out the middleman can be a great thing, unless you're the middleman. And there are a lot of middlemen or intermediaries out there. Entire industries, such as payments, or securities clearing have evolved to rely on them. Why? Because they establish trust where there is none. They establish ownership, that the seller has the right to sell what's being sold. They attest to history, that there is a clean transaction history. And they certify ability, that the buyer has the money to buy it. All pretty critical details when you don't know the person on the other side of the transaction. Intermediaries know and trust one another. Their business is based on it, so they have more to lose than gain from breaching that trust. But what if there were a better, cheaper middleman, one that didn't add as much cost, complexity, and chance for error? There might be. It's called blockchain, and it has the potential to disrupt the entire ecology of intermediaries. It's a distributed ledger that relies on large networks of computers that redundantly encode transaction data by solving complex mathematical equations. The secure ledger provides an inviolable record. If the history of an instrument is incorruptible and available to all parties, there's no need for a third party to vouch. Blockchain is proof of ownership, history, and ability in non-centralized encrypted form. It's fast, transparent, and free of error. The question is not whether blockchains can cut out the middlemen in complex transactions, but rather which middlemen and when.
So guys, that's Kim Sunter there, and that's my book. And 3 years ago, most people thought that this was for other people. My purpose of what I've shown you, up to now, can you agree that every single person in this room can now participate?
Yes.
Whether you want to participate with me or not, that's irrelevant. But with technology, can you now see why everyone can participate? So let's look quickly at the book. Scenario planning, Kim Sunter talks all about. So no matter what happens in the world, like none of us know what's going to happen in the next 6 months. No one. So what you need to do is you have to have different scenarios, okay? And then based on those scenarios, you need to be able to look at your global wealth. So what's really interesting is that you might think you're super wealthy in South Africa. Try going to Davos and buying a beer. And this is what we call our global wealth index. We put it together with all the macroeconomic data. So just a quick show of hands before I show this. Who in the room thinks that South African property is the best property in the world? Okay, fantastic. Who thinks English property is the best property in the world? Someone back. Who thinks American property is the best property in the world? Okay. What about Australia? Where else, guys? Which where? Everywhere. Okay, so what's really interesting is that this is exactly how we invest, on gut feel. And a tip from a mate, and generally a conversation over dinner. Right or wrong. And most importantly, we know everything, all of us. So what's interesting is, let's rather look at the data. So this is really what the book was all about, is knowing where to go and get the data. Because the thing is, what's interesting on the planet is that the information exists. It's just knowing where to get it. So if you look here, I've got Australian property. I'm not going to put Canada for now, because if there's too many, it gets complicated. I'm going to put South Africa, and let's put the United States. Okay, so the pink one is South Africa, the blue, light blue one is Australia, the green one is Britain, and the dark blue one is America. Okay, so according to The Economist, and this is the best research in the world that is all consolidated in one place. And this is live, like I'm literally live now. Who thinks now, based on what I've just shown you, that over the last 37 years, South African property is the best market to invest in? Interesting. So let's look at it in real terms. Take into account inflation. Okay, now let's look at it in terms of price against income. So what does price against income mean? Property prices, and I'm just going to keep it simple now, residential property prices, cannot go up unless people are earning more money. Why is anyone here trying to apply for a mortgage from a bank? You need, the more money you have, the more the mortgage they'll give you, and if the mortgages are more, the prices won't go up. Does that make sense? So this is really important, because if I was looking at this, I can even use my finger, like America actually has more opportunity for capital growth than the other three markets. What about price against rents? So there's a guy called Hannes Dreyer that I would always recommend when it comes to property. Any property, whether it's residential or commercial, is not based on the value of what your estate agent tells you they can sell it for, or what your neighbor says he just sold it for. It's based on the return that your income is giving you on the asset, residential or commercial. So what's interesting is that now you start looking at value, and you can actually see that South Africa and America are the countries with the most value in comparison with Australia at the top and England below. Interesting. You see, now when you start getting the facts, now you start to think a bit different. So I'm not going to bore you with the rest. If you were going to go to America, you could then go into per city. You might want to start looking at, let's just say Atlanta, Dallas. Most people like New York and San Francisco. So again, let's just look there. There's San Francisco, there's New York, there's, that's the United States at average. There's Atlanta, and there's Dallas, Texas. So again, look at it in price in real terms. Look at it in price and income, price to rent, and even the percentage change. What about if we do that in London? I'm not going to go through all of them, but London exists. If you wanted the latest information on Australia, you go to CoreLogic. If you want it in America, it's S&P. If you want it in South Africa, it's the ABSA Index. If you want it in England, it's Academimetrics. So if you are a left-brain person, read my book and I've told you where to find all the information. If you're a right-brain person like me, I just want to get an Uber and go from A to B. So really what we did is we took all that data, we chucked it into some models, and this is what Clem Santa was, why he endorsed me, was because we created these models that helps people know where to invest. Now, can we agree that there are good times to invest in a country and there are bad times? So what's interesting to me is when I go to property events and someone stands on stage and they say, London's a good place to invest. It's always been a good place to invest, and it's always going to be a good place to invest. Well, over a 50-year period, they're probably right. But in a 5 to 10-year period, there's good times to buy stuff and there's bad times. So what's really important is that you must understand that I'm not standing on this stage trying to sell you anything. If I was an estate agent from London, I would tell you London's the best because I've got no other option. Like, does that make sense? Whereas you actually need the research to be able to see, because there's good times to invest in markets and there's bad times. This is a multi-layer modeling system that we use once we get down to the schools and the suburbs. This is Dr. Dolph DeRoos's REAP. And then lastly, this is what Henny and Peter, remember those two billionaires? They have a 142 list. They're both in their 60s that they literally use when they do due diligence. Like, one of the things is check the building on the weekend. Why? Because Henny lost a lot of money once, he didn't check the building on the weekend. So like, this is using 40 years worth of experience. And then really what was interesting is that my partner, Michiel, who's here with his two lovely daughters actually, somewhere. Guys, please just stand up quickly, the two of you, young ladies. Are there three? Yeah. So, guys, these guys, like, while all their friends are out there having a weekend, probably in the shopping malls in Joburg, they're here learning. I guarantee you they're going to be successful. You know, Michiel built a team with a whole bunch of investment bankers, and they took the original KIDS 1.0 to KIDS 2.0, and this is all now in the commercial property space, with all the research that you get in the commercial property space, and where to look and why to look and what to do. So the question then comes in, should I invest locally or offshore? So I want to keep it really simple. You know, if you look at local versus offshore, the returns locally are often higher. Property is tough, so it's actually easier to get started in South Africa than overseas. Peace of mind, my stuff will probably give me zero peace of mind. Financial family planning, rand hedge, and diversification. You know, if you want to look at why you would go overseas, you know, for me there's multiple reasons. But in simple terms, the language I tend to say to people is it gives you a plan B, it gives you peace of mind, and most importantly, it gives you wealth protection. Guys, there's no point in making lots of money and then having it all disappear. I know, I own 3 farms in Zimbabwe. I'm serious. We left Zimbabwe in 1976 in a car, that same dad that you saw, and drove to Durban with whatever we could fit in the car. When investing in overseas, why is now the right time? Well, to be honest, 6 years ago was better. When the rand was 6 rand to the dollar. most important thing I learned from a guy called Ian Fife, who is he's passed away now, but he was the financial writer for Financial Mail. Do today what you can control the variables. Like the Rand, when I looked at it this morning, was 14.50, I don't know what it is right now. Okay, some would say that's expensive, and some would say that's cheap. If you look at an asset and it's getting X return, like if you make a decision today, like you can control the variables. If you sit back for 2 years, you've got no idea what could happen. Like the asset could go up, it could go down. The Rand could go up, it could go down. But the most important thing is you won't learn. And I promise you, every day you sit on the fence is another day towards poverty. So some of the investment pitfalls that people make, they have the wrong information, they don't understand the purchase process, the wrong valuations, the wrong tenants, cash flow, maintenance, the wrong property for the market, they can't sell, and there's no customer service. So we've got 3 reports which I'm going to give to all of you. The first one is the beginner, so it's the 5 laws to building wealth in real estate. Then we've got the intermediate, the 5 keys to offshore real estate investment. And then we've got the advanced, which is the 4 ways to expand your global real estate portfolio. The only reason we give this to people for free, we're sick and tired of watching people lose money. So like, guys, use it, don't use it. Like, use us, don't use us. But please go in with your eyes open. Is that fair? The difference between income and growth. So in simple terms, you know, these are buildings we own, and like I said to you, they're existing buildings with an existing income. A growth project, this is a brand new development, it's the tallest building in Cape Town that's being built at the moment, but it's going to take 3 years to build. Does that make sense? So when we do projects, our income projects, we tend to look at projects that are generally, we're going to hold the project for 3 to 5 years, it's got an existing income, we pay quarterly returns which are coming from the tenants paying the rent, and we've got an exit strategy depending on the project between 3 to 5 years. A growth project generally could be a 2 to 3 year project. It's a brand new development and the return is made on exit because there is no return while it's being built. And if I was promising you a return, I would be a thief. It makes sense because there's no income. It doesn't make any logical sense. So what's quite cool here, okay, this building here, Michiel actually is responsible for this. This guy only deals with 600 of the wealthiest people in South Africa. Everything I've been telling you all day. To invest in that building, you need 2.5 million rand cash and 7.5 million rand bank guaranteed debt. Okay, so he doesn't talk to you unless you've got 10 million rand. Anyone here get the call for this building? Robin got the call.
Turn it down, turn it down.
What's fascinating with technology is that every single one of us, well not anymore because it's full, but up until a couple of weeks ago, every single person in this room could have invested from 1,000 rand, earning the same relative return. Don't you think that's cool shit? The risks, so this is really interesting guys. Risk is everything. You have to protect your money. So in a development, the biggest problem, who here has ever dealt with a developer that finished on time within cost? So like, you know, double time, double cost, okay? Like the risks are quite large. Like, remember that value chain of real estate? There's a reason you make more return in the development stage because there is more risk. Let me be very clear with you, there is more risk. Is that fair? And what's interesting is that in the development phase, there's things also that can be completely out of your control. Like, we can have another global financial crisis and the banks can change their minds. And, you know, I don't care how clever the developer is, none of us can see what's going to happen in the next 2 to 3 years. So you need to be aware of that when investing in the development space. And then on the income side, you know, there's also risk. You know, if you and I own a house and the tenant moves out, does Standard Bank phone you up and go, oh, no problem. Pay your mortgage when you get another tenant. It's called a capital call. So you know, if you don't do this properly, you can actually be asked to put more money in. So what's really interesting for us is that we focus everything on risk. So what Michiel and his team work on is reducing the risk. And how do we do that? Well, firstly, when we buy a building, it always has to have at least 70, sometimes even 80% tenants already in the building. Now, can anyone tell me in the room, why don't we buy a building that's 100% occupied? Could not be the right tenant? Yeah. Anyone else? optimization. So the way I would explain optimization, and I think we're on the same page, is value creation. So if I buy a building that's completely full, technically all the value has been taken out of the asset. Does that make sense? And now I'm just hoping the market goes up. I sit there every day going, please, 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 please. Whereas if I create an asset and I can add value to it, I control my future. The market doesn't control my future. I control my future. Do you see the point? But if it's 70 to 80% occupied, I also don't have to worry about when I have to pay the mortgage at the end of the month. Because we look for a rental cover of generally 200%. So what that means is if the mortgage is, to keep it simple, 10,000 Rand a month, the rental needs to be 20,000 Rand a month. So you've got leniency even if interest rates go up or whatever. Does it make sense? Everything is about managing risk. You know, you've got political risk. Do you know that if you invested in England and you were only in England when Brexit happened, commercial property lost 20%? It doesn't only happen here in South Africa. So to have all your eggs in one basket doesn't make any sense. Dr. Dolf de Roos, who's president of our organization, he had 8 commercial buildings in Christchurch, and there was an earthquake. And they now stand derelict with no income. So, you know, diversification is really something important that you need to look at. And then the question is, how do you actually manage that risk? And I fundamentally believe that when people overcomplicate things, they're trying to hide things. I honestly believe that. Like every time people try to get super complicated, it's they either don't understand what they're talking about and or they're trying to confuse you. I honestly believe that to be successful in the space, you only need 2 things. You need the right information and the right partners. That's it. Now we're going to give you that book and we're going to give you those papers. You go get the right information, and if you know how to get the right partners, then go get the right partners, and or we've got systems to help people do that. So, you know, people can now start to choose. They can say, well look, there's the risk, and don't, you know, these are little graphics that I pulled off Google. But in simple terms, you can see how risk actually works, and how people can decide now, like, where do they want to be on the risk scale. And, you know, I want to be in an income product, you know, that's a very kind of protected, safe product. That's fine. Then I just make my decision on where that is. Because there's no right decision for everybody. So let's just jump through this one, and then I want to take a quick break, and I want you to share with your friend or the person sitting next to you what was the one most important thing you just learned. Is that fair? Guys, the reason that most people lose money is that they do crisis investments. So what that means is that, you know, we get downgraded, or Zuma fires the finance minister, and we literally think, oh shit, you know, I better do something. So we fly to London and we go buy a house. How successful do you think an English person would be if they came to Joburg for 1 week to find a good property? Not very successful. But we are much cleverer than English people, because we can fly to England and do it. And or Sydney, and or America, Cyprus, even Mauritius. Do you see what I mean by crisis investment? They don't get the right information, they don't have the right partners, they don't understand the cash flow, you know, they work with companies that don't know what they're doing, they don't understand the costs, and also sometimes they buy off plan. Anyone heard that famous thing? Hey, put on 10,000 Rand and 3 years later it's going to double in value. Do you know the one thing that I've learned from wealthy people focus on income, and middle class and low income people focus on capital growth. I'm going to repeat that because it's so important. Wealthy people focus on income, and middle class and lower class people focus on capital growth. So remember the conversation I had with you around houses. Why do most of us buy houses? In South Africa, does the rent generally cover the mortgage in South Africa? So are you investing for income or for capital growth? And on that note, turn to your partner and have a conversation. guys. I originally had 3 hours, but Robin spoke 4 times. I've only got 2, so we have to keep the weight. But in simple terms, anyone, I had a great question here that I just want to actually answer for everyone. And then I'd like 2 or 3 people to share anything that they, like any epiphanies or lessons or breakthroughs they just had. There was a question here, there's a gentleman that bought a house for his mother in Sasselberg, and he's paying in, about 2 years ago, and he's paying in 2,000 Rand a month. And he's just bought a house here in Joburg, so, Migrate, yeah, by the Mall of Africa. It's probably going to be cash flow neutral. So the question he asked me was, did I make the right decision? So the first answer I'll always give is, I do not give financial advice. And the honest answer is that I cannot tell you whether it's the right decision or the wrong decision, because it's not that simple. See, the whole thing of where the world's going is that we get personalized. So dude, that 2 grand a month, like if your mother's happy, that might be the best 2 grand you can spend on the planet. Seriously, I don't know. I categorically would pay 2 grand for my mom. So now, is it about IRR? Is it a return on investment? Do you see what I mean? Like, so, you know, these are the things that become important, you know. Is it good to invest in South Africa? Is it good to invest elsewhere? It's irrelevant. It's what's important to you. I will tell you one thing though, and I want to repeat what I said before we took a break. Wealthy people invest for income. That I can guarantee. So, if you're not focusing on income, that's where the challenge comes in. And by the way, it's not just in property. Like, does anyone know who owns the most Coca-Cola shares in the world? Warren Buffett. Why does Warren Buffett own Coca-Cola? Because it's in over 100 countries, and if there's a coup in Zimbabwe, it's not going to affect the dividend. It's income, guys. These are fundamentals of investing that are not property related, they are wealth related. Full stop. Yeah, there was a quick question here. Listen guys, it was nice knowing you all. I can see the moment I answer these questions, the FSP will be right outside. So the question was, he's got 5 properties here in South Africa, he owns them cash, and should he sell them and invest in something else, okay? And again, the answer is, it depends. It depends for you. But I will say one thing, remember the 4 points I brought up right at the beginning. You've got to be diversified across countries, currencies, asset classes, etc. So if all your money was in American property in 2008, residential property, you could have had I know one guy that had 300 properties paid for cash in America, okay? And then when the prices were going up, he had about 150. And then when prices were going up so aggressively, he got excited and got mortgages. And when the crash happened, and by the way, the American property market on average lost between 40 to 70%. Okay? He was wiped out. His exact analogy to me was he was holding onto the anchor of the Titanic as he was going down. And he had 2 choices, to let go and swim to the top or go down with the Titanic. So, you know, that's the only way I would answer that. Like, by being across countries and cultures, not cultures, currencies basically, you know? Yep. And you can remortgage, by the way, but that gets into tax. So you can remortgage, and then, because if you've got a cash property, you're not doing it well from a tax perspective. That's a separate conversation. Yes. So every investment is at least 65% loan to value. And this is also what gets cool. So like if you buy like a property here in South Africa, what mortgage rates are you paying in South Africa, like on average? 10%? Yeah? So like in America, you're borrowing commercially at about 3.5%. So you see now why income starts to make sense, because you can have a rent of 8%, and yes, it is leveraged, as this gentleman said, which basically means you borrow money from the bank, but it means your cash on cash return, which means physical money that gets paid into your pocket, is like 8 to 10%. So guys, another big mistake people make, I was on a plane flying from somewhere in South Africa, I can't even remember. And the South African lady said to me, she thinks that investing in garages is a very good idea. You know, like parking garages? Who here thinks that parking garages is a great investment? Really? Have you not seen what Uber's doing with autonomous cars? Did you not see what Tesla just did with the launch of the autonomous truck? Like, there will be no need for parking garages in 10 years, I guarantee it. I guarantee it. Do you know that every single car in Dubai will be autonomous by 2025? Now, what was interesting is her retort was, we then went on shopping centres. She was like, no, 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 but shopping centres are where you should invest. I was like, really? Like shopping centres are going bankrupt hand over fist in America right now, you know, because of Amazon and whatever else. She goes, yeah, but that's America, and it won't happen here in Africa. Henry Ford invented the Ford motor car. It never turned up in Africa with those Volkswagens. You have to be aware of what is going to change. So remember what I said earlier, where they said you've got to be diversified across time. You've got to be very careful, guys. We've got a partner of ours that owns physical petrol stations. By 2030, there will be no petrol. There will be no fossil fuels on this planet. They don't need them. And that's a whole separate conversation. So if you own a petrol garage, now you better have that convenience stores working on. Performance. Let's just look at a little bit of a track record. So this is the first $16 million portfolio we bought in Atlanta in 2014. We raised just short of $6 million. So there comes your leverage. The projected cash-on-cash return was 8.3%. And remember what I said to you about the internal rate of return was just shy of 16%. But please understand here, guys. I've been on there's actually a great CNBC. I was on TV with another guy, and he was telling the TV presenter that his return was 17%. So the language they like to use in the financial industry is, let's unpack the return. So I said to him, I'm trying to use his fancy language, so let's unpack the return. So the 17% was 3% income, 7% rand devaluation, and 7% capital growth equals 17%. That is bullshit. His return is 3%. Because everything else goes up and it goes down. I just want to be very clear that we compare an apple with an apple. Okay, so when I show returns here, I'm not talking rand devaluation, I'm not talking even capital growth. It's really important to understand. And what's interesting is that over the last 3 years, we paid our investors 10% cash on cash in US dollars. This one here was 11.22%. This one here is 8.49. I must admit, this building, personally, is like seriously good for my ego. No, seriously, it is an A-grade, amazing building that I never thought I would ever be able to participate in. Sometimes. This is another one, 8.29. So what's interesting is that they're not all like, you know, there's different types of projects, but I just want to show you something. Can anyone in the room tell me what is the average return of a REIT, so a real estate investment trust, in America right now? Does anyone know what the average return is? No? Pardon? 1 to 2%. So it's actually 4.75. Okay, it depends. Like 1.2 would probably be New York, but across the board it's 4.75. So what's really interesting, guys, is if the investors are getting 8.29% and the average REIT is paying 4.75%, what is the difference?
Fees.
I want to be very clear. Like, I didn't go to Harvard, Michiel didn't go to Harvard, we're not cleverer, we don't get better opportunities than them. So what do you think the difference might be? Fees. Middlemen. It's that simple. So what's interesting is that the other thing that people ask is, remember I spoke when I was talking about doing comrades, you've got to have a strategy. So one of the strategies that we learned from our co-founder, Henny Besaidnout, and chairman of our board, who, by the way, his first medical building was the Centurion Hospital in 1992. Last year he built 14 hospitals here in South Africa. So what he basically taught us is that when you buy these type of buildings, don't buy them if the equity required is less than $1 million. Because if it's less than $1 million, then all of us can participate. And the doctors and the dentists. If it's more than $1 million, like then we can't participate. But if it's less than $10 million, then the big funds or REITs don't want to play. Because if you went to Harvard and you've got a fancy MBA, like you don't want to get out of bed to do a $10 million deal. Like that, you cannot brag at the pub about that. Like you want hundreds of $1 million deals. Does that make sense? So what's interesting is that we've been going around picking up these portfolios, 12, 15, $25 million, you know, between 2 and 7 buildings in a package. And the strategy was to buy them in a market that was too much for the small guy and too small for the big guy. Now, I explained this to you earlier. How do people make money in property? Please tell me you know the answer to this. Slowly, income. But there's one defining thing that everyone does when they make money in property.
Sit on their own.
They sell it to a REIT. They sell it to a fund or a REIT. So McGill actually has an offer on our first 32 buildings. We're only 3 years in, we were expecting to do it in 5 years. The REITs don't look at it unless it's worth $100 million. Our portfolio is over $100 million. And right now our investors are being paid a beautiful return, and now they've got a beautiful problem. Because do you sell? Because everyone's a seller at the right price. Make sense? So do you see how strategies start to become important? And I'm just using the medical one to give you an understanding. It's not as simple as just go out and buy a building. Like, yeah.
Are you essentially fulfilling part of that role in the value chain? You've taken up a position before the REIT.
Exactly. So if I could go, I don't want to go back through all the slides, but maybe I should actually pick it. Remember this one? So there's the REIT, and through technology we're helping people invest here at income and here at growth. Makes sense? Does it now make a little bit more sense, maybe? And yes, our exit strategy is to sell to REITs. And REITs will continue to sell to financial planners, and financial planners will sell to everyone who hasn't been to this talk. So guys, just a little bit of track record. You know, again, investing in different markets. You know, we started investing in Australia in back in 2008, 2009. We started investing in England. No, sorry, which one's that? Yeah, England. So what was interesting in England, we started there, we stopped there, we started again there. And in America, we literally invested at the bottom of the market within 1 month. Now, what's interesting is that, do you think that we are super intelligent? We're not. We're not. Guys, it's data. The one thing I would, to some extent, disagree with what Brian said earlier, is that business is about people, but it's now also about data. I suppose actually that's what you did say, actually, with all the data. It's about data. You shouldn't be using your gut feel. You should be using data to know when to invest in markets and when not to. So, just in the interest of you as South African, and you invested in 1978 in an American house, you would be 424% better off than if you invested in the South African house. You would be 499% better off if you invest in Australia, and you'd be 332% better off if you invest in the UK. Who would like to go in a little crystal ball time machine back to 1978 and put a blended portfolio and invested across those three markets? Well, you could sit on your bum and hope that over the next 38 years nothing changes, or you could run up to the front and I've got 20 trillion Zim dollars and 5 billion Zim dollars. Guys, life doesn't change.
You're a billionaire! You're a billionaire!
So let's look at portfolio strategy. This now becomes really important. Please understand this is probably the most important thing for you and your family. Remember the first lesson I told you about wealthy people investing in income? The second thing that I've learned by wealthy people is they got discipline. So what most people think is that if I bet on that next house, like maybe that one in Migrate, this is going to be the tear-away success. I'm going to make all my money. Or even I invest in the next Apple, or what, like I'm talking stock on stock market. It doesn't exist, guys. It's discipline. It's exactly what Brian said about business. So what's interesting is that this is a lot of writing, okay? And in simple terms, this is one of our very intelligent, ex-investment bankers that now works full-time on the team. And he said, listen, if I invested $1,000 in two of the different projects, so one was a multifamily and one was a medical, and based on the returns over the next, where was the number of years? Anyway, so, 16 years. No, because this is what's important, is that he was actually looking at it for his kid. So like, where would it be? Basically, in simple terms, it would be $2 million in 16 years, and it would be $3 million, depending on the two projects. So what's really interesting for me is that I I did this the other way around. Like again, I told you already, 2 years ago when gravity was no longer an issue at UCT, I said, right, that's it, it's over. So I've got one little boy. I'm trying hard for two, but it's not working because Robin keeps making me come to events.
But think about it, thoughts.
So I did the maths actually about, I think it was last year I did this maths, and it was what is the average cost of an average university in Australia, America, and England, and then I took Melbourne, Harvard, and Oxford that are arguably the three best in the world. I took the tuition cost, I took the total cost, because anyone who's been to university will know that you have to have beer. And then I took it for 4 years, I took an exchange rate, and I basically just put it out over US dollars so that it was easy to do. Does that make sense? And then what I did is I said to myself, well, you know, my wife and I invest $100 times 10 years at 6%, so basically 6% is pretty much what I'm going to get in the financial markets. My kid can go to UCT. At 15.2%, you know, over here, he's still, like the white blocks are of South African universities. At 500 for 10 years, you know, he can now, depending on the project I go, so if I just go in the normal financial industry, no hope, but if I go in the projects I've been showing you, you know, he's now going to one of the top universities. If I do $1,000 per month, he can go to any university he wants, and my second child can go to university as well. And at $1,000 times 14 years, they can go to Oxford, Cambridge, Harvard, whichever one they want in the world. See how far important financial discipline is. So I read a really interesting article on the plane this morning, and I'm not quite sure where it is. But in simple terms, Christmas is coming up. And do you think that your child, or your grandparents, or your parents are going to be really excited about that next little plastic toy? Or do you think they might actually like something that really actually going to make a material impact on their lives? So this whole article was an investment that keeps on giving. And it's talking about how we really need to shift our thinking from buying toys for our children and actually helping them invest. What's more important than helping them invest? The physical cash. Education. Yeah. So I believe where the world's changed is that 15 years ago we would have been in an event like this. It would have been run to the back of the room. You can pick up my book. I've got a coaching course, and 96% of you, statistically according to Tony Robbins, would do nothing. I believe the world's changed. You can learn while doing it. So my son is 5 years old, and for Christmas, he's not going to be very happy at 5, I'm not going to be very clear about this, but he's getting an investment on the platform. And then Daddy and him and Mommy can talk about what's happening, why it's happening, and ultimately, we can play Monopoly in real life. Now, just before you give me claps, the guy that needs claps is Willie at the back, and Willie's daughter is how old? 12?
11.
11. She was the very first child in South Africa to invest on our platform. And I mean, really credit to you, Billy, because you were the one that drove under 18s to be able to participate so that he could help his daughter, not just with money, but getting on to the path to success, because it's the discipline that's going to count like more than anything. So I'd like a round of applause for Billy. So guys, what about fees? So if you've read that book, if you can save yourself just 1% in fees, one, what will that have on your life? You know, when you're anyone know? About 10 of you have read the book, so I hope you can remember this, yeah? 30-50%. What it actually equates to is 10 years of your retirement income. So if you're planning to retire around 65, and the average age is, you know, whatever, 85 or something, like half of your retirement can be fixed by just arguing for 1%. Now come back to that fund or REIT. Remember I said 4.75 versus 8%? That's 4%. That's 40 years of your life. Now you start to wonder why the 99% are not getting wealthy. I ask myself, why is Robin have to be part of courses like this, and why we're not being taught this at school? You might not want to read my last LinkedIn article. The second part is that the very people charging us fees 96% of them don't beat the market. And so pretty much it's tails, they win, heads, you lose. Because they charge the fees. Oh, and they charge a lot of fees. But they don't beat the market, but they still charge you the fees. How do you become a global citizen? Guys, I could talk about this for an hour. A lot of people here want a passport, not just a South African passport. The challenge is that what they tend to do is they run off to Mauritius or Cyprus or Portugal or many other countries, and they think that they're going to buy a great asset and they're going to buy a passport. So in that book, chapter 10, I analyzed 16 different countries. And from my experience, it's very, very seldom that you get a passport and a good asset, a good investment. So Robin was talking about my boat. Okay, now every single morning I go sit at the water there and I look at my boat and I go, you're a great investment, you're a great investment. Let's be honest, I'm kidding myself. So I buy that boat for pleasure. If you want to buy a passport for pleasure and for your family, that's a different reason from kidding yourself it's an investment. Do you see my point? There are countries, a lot of our investors have invested in America, so you can do an EB5. It's $500,000 and you can invest in basically a green card. But honestly, I fundamentally believe the way to become a global citizen is just to start. Because once you start earning pounds and dollars and Australian dollars and euros, I tell you what, you'll have a different mindset straight away. I guarantee it. My business partner in 2013 joined the team. In those days, he had never left South Africa. The very first trip back from America, I said, be careful, bugger. You've just realized what it's like to earn US dollars. Do you know this year his son is on a pro scholarship in America playing golf? 4 years, eh? 4 years. That's what a global citizen means. It is not something that takes 30 years. It's a mindset shift. My uncle is from Zimbabwe. He bought his way into Australia. But do you know how he did it? In 1980, everyone else said, no, Zim's a fantastic place. And for the next 19 years, Zim just went. But in 1980, at the age of 30, he opened an offshore bank account. And while he made money in Zim, he invested in first world currencies. And in 2003, when he decided, not for money reasons, but for his child, that he wanted to move to Australia, he bought his way into Australia. He bought a house with cash. He put his kid through one of the best private schools in Australia. And most importantly, he retired and did not have to work for an Australian. But it took him 23 years. To see why this discipline is so important. What about the difference between a fund or a REIT? So there's lots of fancy words. You've got REITs, you've got funds, you've got syndications. So who's heard of ShareMax here? Yeah, ShareMax, syndication. You've got direct investing, you've got Fintech, which is the marriage of, it's basically financial technology. You've got crowdfunding. Who knows what crowdfunding is in this country? Shit. Amazing. And then you've got collaborative smart investing. So what's interesting is that really technology's come into space. So I wrote a dissertation, I don't know if you even know this, Robin. I wrote a dissertation in 1998 at UCT on how technology was going to change the property and construction industry. Now in those days they couldn't spell IT. And today what I wrote about is like so common sense, but in 1998 it was a little bit ahead of its time. I then did my master's in London on the exact same topic, and I pretty much spent my entire life trying to figure out how to marry together technology and property. What's interesting is that people always like to get caught up in acronyms. So is it Fintech, is it PropTech, is it ReTech, is it crowdfunding? Well, quite frankly, guys, it's just technology coming into space. Do you see where I'm going with this? So what's fascinating is that we've got an entire white paper where we've broken down the difference between public funds, private funds, REITs, syndication, direct deals, and even crowdfunding. Because you know, crowdfunding is quite interesting. In this country, some would say it's legal, some would say it's not legal, some would say it's a great thing, some would say it's a terrible thing. We don't do crowdfunding. What we do is bring technology to the space. And so we evolve all the time to use the best technology and the best regulation to help you invest in the best deals as cheap as possible today. So if the technology and the regulation changes, we evolve with it. Does that make sense? And this is an entire discussion, but in simple terms. The way I see it is that a syndication charges a lot of money up front. ShareMax charged 26% up front. If you invested 100 Rand, they took 26 Rand in fees. They paid the financial planners anywhere from 10 to 15%. And by the way, you were bankrupt from day one. Because on the balance sheet you had 100 Rand invested, but you actually only had 74 cents in assets. In a house, you're paying an estate agent who they, whether they're buying or selling the house, do they make more money just by doing the deal or by helping you get it for a little bit cheaper or a little bit more? Does it really make a big difference on their actual commission they earn? Zero. They just do deals. Make sense? What about funds or REITs? So it's interesting with the fund or REIT. Does anyone know how funds or REITs actually get paid their fees? It's called NAV, which is net assets, sorry, not NAV, net assets under management. Anyway, whatever that acronym. Basically assets, AUM, it's assets under management. AUM. So what's interesting, if you meet two fund managers and they're in a pub, do you think that they boast about the returns that they made for their clients? They don't. And trust me, go and hang out in the pubs around the financial area. They talk about how many assets they got under management. Why? Because they earn between 1 to 2% of whatever assets under management they've got. So what's really interesting is, why is this all important? Well, if you were going to start a business, and you're a business partner, and you wanted to build a great company that was going to help a lot of people make a lot of money, and your business partner wanted you to start the business and then you want to go on holiday and go surfing forever, do you think that's going to work? No? What about if you get married, and you're marrying for love, and he or she is marrying for your money? Now, quite often I get sometimes. But I mean, realistically, is it going to work? No. So why doesn't it work? Our interests are not aligned. Think about it. The interests are not aligned. So why are you all in this room is because your interests are aligned with Robin. Would you all agree that Robin deeply and personally cares about every single one of you in this room and will do what it takes to make your life better, yes or no? And the pause for him. And equally, Robin's here doing something he loves, and every single day he's learning how to impact more people, so he's adding value to you, and you're adding value to him. Do you see how your interests are aligned? So what's interesting, when you look at this whole big table, it looks super complicated. Simple terms, you need to invest with people where your interests are aligned. So collaborative investing is a term, and I highly recommend you go and look it up, where there's 5 characteristics, and again, you can go on my LinkedIn, there's a whole article if you want to. There's 5 characteristics to successful collaborative investing. The first one is that the person has to put their money in the deal. Imagine asking your estate agent to put some money in the next house you buy. The second one is that they have to have expertise localized. So like they've got to be experts in their local market. The third one is that you've got to set the deal up so that your interests are aligned. Not in the beginning, at the end. The fourth one is that you've got to consistently be engaging with it. There's got to be consistent dialogue. Like, I was in Brisbane last week. I've invested in a residential development there. It's a 50-unit building. And right now, it's not going according to plan. And it's not our fault. The Chinese government stopped all Chinese investors from investing in Australia, and at the same time, the banks pulled all funding for investors. And that's what happens in business. Remember what I told you about the risks of growth? But are we boxing? Are we fighting? Are we going to the lawyers? No, we're not. We're sitting down with the developer going, cool, what's the plan? What are we going to do? Do you see how you've got to have constant dialogue? And the fifth thing is that, coming back to the very first slide I showed you, you've got to be diversified. It can't just be you and me have a great relationship, and I've got my money with you, and then something goes wrong and the whole thing goes pear-shaped. So the problem is, guys, is that was only available to the top 1%. That's why we're going collaborative investing. Who in this room, please put up your hand if you've actually heard of collaborative investing before. 1 person, 2 people, 3 people, 4 people, a couple. Let's call it 10 people. Do you know why? If we were at a family office conference, so family offices are the people who look after the wealthiest people in the world and their money, every person in the room would know what collaborative investing is. So what is collaborative smart investing? Well, we just decided to stick a bit of technology on it so that all of you can participate. So, guys, just in terms of us, you know, I believe the future is all about trust. It's the currency of the new economy. You know, there was an old way, so this was old way. It was lots of middlemen, limited trust, slow and inefficient, and very difficult to understand. The new way is no middlemen, increased trust, transparency, marketplace delivers faster and cheaper, and it needs to be simple. You know, for me, when you look at the two ways of, you know, the old world was all about control. The new way is all about working together. User ratings. So I'm here with you tonight, and my wife is actually at her 40th birthday here in Joburg, but my son is at home in Niceland right now with his nanny, and we've got people in our house. Oh my word. This is South Africa. Who would have put people in their house 5 years ago before Airbnb turned up? Yeah? I'll tell you what, that holiday to Zanzibar this year was pretty cool for doing nothing. Like literally, like we rent out our granny flat, and that income, which we pay for the house anyway, literally is for free. Makes sense? Do you see how technology is changing trust? How many people here have been picked up by a woman at night in this country driving an Uber? I have at least 5 times. At least 5 times. Before technology turned up, would that have been safe? For them or for you? So I want to play you a little video, and I'm quite excited, and it's quite special for all of you actually, because I literally downloaded this about an hour or 2 hours ago, and none of my team have seen it either. It's brand new.
We'd like to introduce you to a revolution unlike any other throughout the history of mankind. This is a wealth revolution, and it's going global. Did you ever think that you'd be able to benefit from the only real, time-honored investment mankind has ever known? Real estate. Real estate investing has only ever been accessible to a small percentage of the world's population. This is no longer the case. The wealth revolution means that wherever you are on your wealth journey, be it taking your first steps or taking off globally, you can join our global community. A community of real estate investors just like you. The Global Wealth Group is experiencing exponential growth, and wealth has never been this accessible. A truly global wealth revolution. We dream big, and our dream is to impact the lives of 1 billion people. 1 billion people. How will we do this? Through groundbreaking digital platforms that allow investors like you to take part in exciting real estate investment opportunities. These opportunities are waiting for you everywhere, anywhere, worldwide. Now you can invest in real estate with any amount of money, from the comfort of your couch or your internet device. Introducing our global brand ecosystem. Wealth Create, Wealth Migrate, Wealth University, the Wealth Movement, and the Wealth eCoin, which unlocks the entire ecosystem. WealthCreate.com is a platform for those taking their first steps on the wealth journey. The new investors who earn whilst they learn using real or virtual currency. Imagine this. Now anyone can own part of a hospital, a share in their local shopping mall, co-invest in a new and exciting development, or even earn quarterly returns from residential and commercial tenants. They, you, can now stand alongside multi-millionaire investors and earn the same relative amounts. WealthMigrate.com is a platform for those investors who are already soaring, as well as those who seek to join them. You can now own and manage a global portfolio of commercial real estate and do it all online. You'll benefit from the capital growth of your investments and get paid quarterly dividends in first world currencies, whether they be from commercial tenants or the funding of developments. The global dashboard shows all available opportunities, potential investment pledges, upcoming deals, and most importantly, allows you to manage your global diversified portfolio in one place. passports and visas also become easier to obtain, as well as tax-efficient structures that allow global flexibility. Create the freedom you desire for you and your family. WealthUniversity.org is a video-based e-learning platform for those who want their wealth knowledge to take off. Our research shows that the wealth mindset is the single most important aspect of creating and sustaining wealth. Test your wealth IQ and challenge friends and family to find out theirs. Acquire the thinking, secrets, habits, and proven success strategies used by the world's wealthiest investors, as well as that of our global community, who aren't just talking about it, but are actually creating it. Graduate and change your destiny and your future. WealthMovement.com is the global gathering of our fans and followers in conferences hosted in local cities around the world, inspiring minds to help each other create more sustainable global wealth. The goal? To build a wealthier world together, and together to help reduce the wealth gap between the haves and the have-nots. Gain the latest up-to-the-minute knowledge of technology forecasts, internet finance, exponential thinking, collaborative smart investing, co-creation, apps and platforms, global wealth forecasts, cryptocurrencies, and new and exciting investment opportunities. This is your chance to meet your global wealth partners, co-investors and friends, to be inspired by the world's wealthiest individuals and to learn to think how they do. WealthE.io is our cryptocurrency, which is based on real estate. It unlocks the entire ecosystem, whether it be the community working together on due diligence, education, investments, social networking, community engagement, purpose, or many other applications within the Global Wealth Group ecosystem. Let's build a wealthier world together. The WealthE coin is the catalyst to ensure this happens. At the Global Wealth Group, we are pioneering a global wealth revolution. Join us. Let's change the world.
Thank you guys. It's not all built, but it's giving you a window into the future of where we're going. I think, today I told you these numbers, but you can recognize them. And I wanted to honor you, Rod, because, I went on that mind power course, I don't know how many years ago, eight years ago or whatever. Every single day I do my affirmations. Every single day I prime, which is a mixture of meditation, knowing what your goals are. Every single day I do it. And I really back up what he says in terms of having that ongoing discipline. When I did mind power, I'm not sure how many people, like once you finish your mind power, like you maybe do it for like 3 or 4 weeks. Like I've done it every single day since. Yeah. Like I don't need claps. I want you to.
I'm clapping for you so they can get the message.
Yeah. I want you to internalize this. Because this has been built by an incredible team and a resolute vision, but against many, many challenges. But it's the stuff like the priming and the mind power stuff that's helped me and helped us get there. As a team of people at the board level, this guy, most of you have heard of private property. Justin started private property in 1997. Martin Freeman is a very well-known Fintech. His last business here in Joburg actually just got funded by 500 million rand by Investec. Joy Scoffer is one of the top women in America in Fintech. Paul Nadera actually built the very first crowdfunding platform in the world back in 2008. He's known as Mr. Compliance around the world. Dr. Dolph DeRoos is part of the whole Rich Dad, Poor Dad series. Those two very wealthy gentlemen from Pretoria I told you about. I try and make sure that we're in the right deals. And if anyone knows anything about Bitcoin or blockchain, we're working with some of the best in the world. Who in the room knows what Ether is? You're very confused, I understand. David Orban was the very first owner of Ether on the planet. Just to put it in perspective, Michael Turpin's done 64 ICOs. They're some of the biggest in the world. How do we make money? You're thinking it, I might as well just answer it. So it's very similar to the Airbnb model. There's a direct fixed fee up front, So to do the due diligence and put the project together, I can guarantee you that if we are not spending money, you and me, because we're not putting my money in the deals as well, on our due diligence, we will fail. Guaranteed. And then we actually earn the bulk of our income on the back end after we've outperformed the target returns. Alignment. Remember? So I want to finish with a couple of thoughts. You know, we always hear about the rules. I flew up here with my wife, and my wife loves rules. She's a lawyer. And when the lady comes down on the plane and they say to you, listen, you must put your seatbelt on, you must stop using your cell phone, and 20,000 other instructions. I'm like, why must I do that? In America, I can fly with my cell phone on, so why can't I fly in South Africa? Because it's the rules. Okay. But the same people that made the rules said that the world was flat. They also said that we couldn't fly, we couldn't go to the moon. They said that Africans couldn't vote. They said that women couldn't vote. So maybe, just maybe, the people that make the rules are right. But I can tell you one thing, which my wife and I don't agree on, because I don't switch my phone off. It's a matter of, you know, whatever. But what I can tell you is that the laws never change. And there are laws. And there is a law of gravity. If I drop this, it goes down. In the same way in nature, we know the rules of investing. We know how to get wealthy. We've learned it for thousands of years. If it's the animals going across the savannah, if it's fish swimming in a shoal, if it's birds flying in a flock, a bird flying in a flock can fly 70% further than a bird flying on its own. And yet virtually every single one of you in this room is flying on your own when it comes to wealth. And we know the laws of nature, and yet we don't listen to them. So you know, this, just to whet your appetites, this is a building, a medical building in Atlanta. This company is 42 years old. They've had a 96% occupancy, and their balance sheet is $3 billion US assets. And what's interesting is people say, well, why would they invest with us? It's very simple, guys. There's three reasons. Firstly, this building, probably not this building, but a hotel 10 years ago didn't need to be on TripAdvisor. Today it's on TripAdvisor, it is not in business. Secondly, most people in the property industry are not even in the 20th century, they're in the 19th century. So like they're really, the forward-thinking people want to go towards the future of technology. And thirdly, what's actually fascinating, you might have heard that number, we want to empower 1 billion people. Yes, we said 1 billion, is that a big enough MTP? But why do we want to empower 1 billion people? I told you already, 12.9% of the world's population has access to real estate, that equals 1 billion people. We set ourselves a challenge to double it. And my point being is that people love it. So that's why this is not the scraps, this is not the crap that no one else can get funding for. It's a different mindset. So if you're a property partner in this room, and you've got a 10-year track record and you're prepared to put your money in your own deals, come talk to us. We want to partner with the best partners anywhere in the world. This year is Medical 10. It's actually literally about to launch. This year is a British development. There's a really unique opportunity in Britain where they're converting offices into residential apartments. This is my interest. After everything you've learned today, don't worry, Rob and I are very conscious of the time. After everything you learned today, is it better to go to the Santon City Hotel, and there's a big developer who comes out with a local estate agent and to buy an apartment, or maybe to partner with the developer? Remember the value chain. This is quite interesting in Australia. This is actually industrial warehousing, actually cold storage warehousing. So you know one thing, you can eliminate a lot of stuff, but cold food still needs to be kept cold, and it still needs to go from A to B. Do you see how this has got long-term sustainability? And this year is a medical building right here in South Africa. So all of them are becoming available in the next I don't know, a couple of days, couple of weeks now. You might notice there's no big numbers and projections, and like you might notice I'm not trying to sell you anything. Why? Because two reasons. One is go on the platform and get as much information as you want, and then make a decision for yourself. Do you see the difference? Secondly, a lot of people ask us, Anne's going to be here tomorrow, a wonderful lady. And she would ask me, said, Scott, listen, the problem is there's not a huge amount of variety. We focus on safety, guys. When you go to a flea market, there's a huge amount of variety. Some stuff is great and some stuff's crap. We like to be Harrods. So, or in this sense, Woolworths, where we might not have as much variety, but when stuff comes in the store, our job is to try and make sure it's quality. As we grow, we will get more quality, but that's the reason we don't have loads and loads of projects. Is that fair? And if you come to me and you want to do a development and build a marina in the Karoo, like that's not really what we look for. So just a couple of things to finish out. If it's something you're interested in, particularly if you're in the real estate game, we've built all the back-end technology. We've got a full-on referral program and partner program where, in a transparent way, if people are referring their clients, they can actually invest. Everyone knows exactly what's happening. It's all tracked digitally. And you can speak to me or my partners about that. And then this is probably one of the things that I'm most grateful for on the planet. What is happening at the moment in the world? Like Uber is the world's largest taxi company that owns no vehicles. Facebook is the world's most popular media but creates no content. Alibaba is the most valuable retailer that has no inventory. Airbnb is the world's largest accommodation provider that owns no real estate. What is happening on the planet? Can anyone explain it to me? There's two important things here. The first one, yep, sorry. Knowledge economy, 100% right. Yep. Connectivity? Exactly. So it can scale. So what's really interesting, taking into account what you've all said there, is that they're all data businesses. It's actually data, if you think about it. And then what gets interesting is, well, how do you look for companies that are going to really disrupt the market? And I fundamentally believe that there's only two things you need to look for. You need to look for an industry where the user experience, you and me, is a frustrating, inefficient, and bloody, quite frankly, just pisses you off experience. And then you need to look for one that has lots of middlemen with lots of fees that can be disruptive. So let's think of Uber. I mean, how fun was it catching a taxi before Uber turned up? It wasn't pleasant in any country. And then on top of that, it wasn't cheap. Do you see the logic? So, what about this little industry? I mean, buying a house is an awesome experience. Renting a property is even better. Try and invest in commercial, etc., etc. And then I think I've said enough today about the fees. So what was interesting for us is that, a lot of people talk about businesses, and we actually had an interesting thing. Back in 2014, a lot of our clients would come to us and they were saying, listen guys, we like the medical building, but how do we actually invest in the platform? And what's interesting is in the old world, you would have a startup, no one ever heard about it. It was for friends, families, and fools. And then you would have an IPO, like an Amazon or a Facebook. And that was it. Like the only way to get involved at other levels was to be a venture capitalist. And so what was interesting is that, they would get involved here, and I mean, everyone knows the sort of money that these type of companies are made. And there's this new sort of place in businesses now where there's what they call growth businesses. And what was fascinating is that when guys, clients came and said, listen, we want to invest in platform, not medical building, we were like, well, you can't. And then three things happened. One was that Henny and I started the business, and we were going one for one in setting the business up. But I've already told you Henny's got ones than I do. The second thing was I read a book called Behind the Cloud, which I'd highly recommend, and by Mark Benioff. And he basically started Salesforce. And in '99, he literally went along and to the venture capitalists. He said, hey guys, I've got this great idea. I'm going to put CRM, which stands for Customer Relationship Management, in the cloud. And they said, it's never going to happen. People will never let their data leave the building. Today is the 14th biggest tech company in the world. But how did he do that? He went to his actual clients and he said, hey guys, why don't you invest with me? Let's build a great company together. And because they had a vested interest, they made it happen. So we literally launched our Wealth Partner concept in 2014. And it's the thing I'm the most proud of and grateful for. We've got 120 partners around the world. We all have a vested interest to win. it's not only about profit, but it's about working with like-minded people. And most importantly, I believe it's part of our destiny to solve the greatest challenge on the planet. So, you know, what was interesting is that this is what we call the honeycomb. Going back to nature, it's literally, the honeycomb is the most resilient structure in nature. Our wealth partners are part of the honeycomb, and there's 6 different areas where people like to focus and learn. And I want to finish with one last thought. So we asked earlier how many people invest in Bitcoin. Can I see quickly how many were again? How many people in the room roughly? It's actually quite a lot. You've got new adopters in this room. Probably, what do we say, 20% of this room. Now, just an interest, does anyone know what the price of Bitcoin is today? $8,400. Can anyone tell me what it was 12 months ago? 742. So call it 700, 800, doesn't matter. Can anyone do the maths? Like, what sort of increase is that? It's 10x. Who would have liked to have owned Bitcoin? I don't. So what's interesting is that even for every single one, so for every person who's in the room that owns Bitcoin, I'd like you to please just come up to the front here and just explain to everyone else how you value Bitcoin.
The day they start, you would have been 2.1 billion rand short.
I've met many 19-year-olds that are US dollar millionaires, and it makes me feel flippin' old. But seriously, guys, why I believe that Bitcoin, from a mass adoption perspective, is that the future is on building a cryptocurrency with all the benefits of cryptocurrency, but on an asset class people understand. And whether you are a rice farmer in China, a rickshaw driver in India, a goat herder in Africa, or an investment banker in New York, every single person on this planet understands real estate. Whether they have it or not, it's irrelevant. They want it. Right or wrong. So we built a cryptocurrency, which we haven't launched yet, called WealthE Coin. And it's a cryptocurrency based on real estate. And we literally are launching it. I'm off to Japan in 2 weeks. And our tagline is wanting to make the world more wealthy. So what's quite interesting for me is that that's a picture of my wife and my son. He's 5 years old. And at a very young age, he's learning that to own greenhouses and red hotels and earn a passive income is what you call smart investing. His dad, at a very young age, wanted to turn Monopoly into real life, and with an incredible team, has turned that, that dream into a reality. And this is my wife and I's portfolio across residential and commercial assets on 4 different continents, and sometimes investing as little as $100 with Henny and Peter. Remember the 2 guys from 2009? So I'm diversified across assets, countries, currencies. And I'm learning while I'm doing it. It's what we call smart investing. The wealthiest people in the world, the top 1%, they focus on generational wealth. It's what we call smart investing. And we personally want to put smart investing in every single person's pocket. And we fundamentally believe that with the WealthE Coin now, it'll be the catalyst to allow and make that happen. Where people will not only be able to trust, but will be able to remove those friction costs, so we can get it down to that dollar per person per investment. So, what's interesting for me is that if I review you back to the very first slide I showed you about the 4 most important things. So just by the way, if you don't know who Tony Robbins is, which I'm sure you do in this room, so I didn't even bother going into it, but he has access to the wealthiest people in the world. And when he wrote this book, he interviewed the top 50 wealthiest people. That's what the book was based on. Do you remember these were the 4 things? And can you now see how with technology, this is now possible for you? If there's one thing I hope and pray for when you leave tonight, you now know that it's at least possible. So, it's quite interesting. I feel very strongly in learning while doing. So, there's no blunts in the back of the room. I'm not standing outside. And there's no sale. We actually want to give you something. So each and every one of you are going to get $100. Robin and the team are going to, we're going to email you on Monday. because I've learned that if you get a piece of paper like this, you're probably going to lose it. It's real $100. It has an expiry date, 31st of December. And the reason being is it sits on our balance sheet. So, and then the question is, people say, well, why would you do that? What's the scam? On this side, but that's no scam. Why did Uber give you a voucher? Once you called an Uber, you never went back in one of those old taxis. So, each and every one of you will be getting a voucher for $100. I actually think it's that time of the year where what I'm more excited about is about paying it forward. So I do actually have 50 vouchers. Myself and my business partner Michiel and Villian Teresa, who are at the back of the room. There's no run now, not the first 10, but really there are only 50 physical vouchers. Every single one of you will get a voucher. But what I ask for people that want to is take this voucher. Do you know what I gave my Uber driver today? $100. And I ask you all to pay it forward, guys. We are not going to solve the world's greatest challenge on our own. Not us, not you. But it reminds me of the starfish story, where every single person we help, it makes a difference in their life. So I ask you to pay it forward. Take the 50 that we've got, pay it forward. Maybe at Christmas, don't think about yourself, think about someone else that you might want to participate. We've got an incredible, if you're a business owner, like the whole conversation earlier, we've got an incredible policy in our company where every single deal, every single person, from the tea lady to the chairman, gets $100 in every deal. And we've got a lot of clients now. One of the clients that Michiel's working with, they've got 700 staff members. And this year, rather than getting a 13th bonus check, they're getting assets in first world income. So I ask you, what can you guys do? What can we all do? Because paying a 13th check to go and buy a bit of crap in an electronics store is not going to change people's lives. Do you see where I'm going with this? So I really ask you, we've got WhatsApp groups on the email. I know I don't read emails, so I really take your advice. But do look out for this email, because we'll have 3 WhatsApp groups. We've got a digital real estate group, we've got an exponential technology group, and we've got a cryptocurrency group. So if you want to learn from some of the best in the world, like you literally voluntarily sign up to the group, you watch and communicate, and if you don't know what you're talking about, it doesn't matter, you just learn. And the best part, if you want to leave it, you do. And I think Robin's going to open a group for this room as well.
It's an option if that's what they want.
So, who would like in this room to have a WhatsApp group with all of the people on this room in that group? Okay, well, you know, so I think Robin and the team should sort that out. It's amazing. My David Destiny group from December 2016, we have a WhatsApp group, and I learned about the best books, the best courses, we hold each other accountable, it's fantastic. You'll get a copy of my book, you'll get the videos from Dr. Dolph DeRoos, you'll get all 3 of the white papers, and also, ironically, if you go on the platform, that building that I told you about, in the 27th of April next year, we're giving it away an apartment with 2.6 million rand for anyone that has signed up on the platform. And why are we doing it on the 27th of April? Can anyone tell me? Freedom Day. Everyone in this room has got political freedom, it's time for economic freedom. That's all from me. You started with a little story about a 5 or 6 year old from Durban that had a dream to run Comrades, failed to start off with, and then got a strategy, got a system, stayed the course, and got my 2 medals. And all I ask for you, all I plead with you guys, is that if you do that sort of stuff to take control, you will succeed. And hopefully today, I've shown you 3 things. A strategy, a system, but I can't make you make the first step. Your burning desire for wealth is your choice. Thank you very much.
How did you feel? How did TJ my mic? How did you feel? Thank you, Mr. DJ. Thank you, Mr. DJ. What I want to acknowledge you for, many things. I really feel, I know Scott. He really wants to make a difference to the people who can't make a difference. People who feel there's no hope. I think there's incredible hope now. Would you agree? And so, what I just want to do, this is my company.
That's not just the people outside this room, it's all of us. Guys, I am passionate and our team is purposeful around you having the freedom to live where you want, to send your children to whatever school you want, whatever university, to donate to whatever charity you want. You need the freedom to make the decisions in your life. And whether that's for you or the other people, it doesn't
I want
matter.
to hear about the passport thing. That one was the one I was interested in, like the passport. But hold on. So here's something. Guys, we're about to finish. We will finish on time, I promise.
What is the time?
6 o'clock, we'll finish at 6.
What is the
We'll finish at 6. Promise.
So what's really interesting,
That's something.
what's really interesting, I only was given 3 hours to prepare for this, and today it was like shrunk to 2 hours. But I did it in 2 hours and 12 minutes.
And you started at the so, but here's what I want to say to you. I believe one of the things I learned from John here is to always have a moral code. And John's moral code is number 1 moral code. I've stolen from John. Only enter into win-win partnerships. To only enter into win-win partnerships. And so when I spoke to Brian, when I spoke to Scott, when I spoke to John, I said, here's the thing. It needs to be a win for you. It needs to be a win for me. Most importantly, it needs to be a win. It's not a win for you, I'm not interested. Because I'm in this game for the long term. And how many of you came to my seminar because you heard about me from someone else? Because they produce results. So I promise you, if your objective is to make money and screw someone else, good luck. Someone's going to screw you. You will be screwed. So, a moral code I want to recommend is enter into a win-win-win partnership. And when I spent time with Scott, I was like, wow. So help me understand. Help me. Because by the way, how many of you are a bit confused? How many of you are going, what the hell? I was just sitting back there going, what the hell? So speak to me like I'm 6 years old. Wait, let me try. Here's what I understand. I can invest for as little at the moment. Last time I spent $100. I turned it to so I can take $100. I can take 1,000 rand right now. I can take $100. This is $50. I can take $100 and I can go onto the system and I can invest $100. And that I know that there's an expected return, you'll have to help with the term, of somewhere around 8.49% average. Is that what you're saying to me?
No, so every project will be different. So if you invest in England, it will be different from America, it will be different from Australia.
That's why I said average.
Yeah. So, but the point being is that you need to look at the different returns. There'll be expected returns on a project. So let's say it's 8.49. It'll be on that project. We're not a fund or a REIT. So it's not 8.49 across all the projects. It's 8.49 on that project.
That's an expected return. Yes. So there are no 100% guarantees.
There never is an investment.
There never is.
And if there were 100% guarantees, we're fusing you for the future.
Right, which you're taking. But what I'm also hearing you say is that you are investing in the same thing that you, so you're investing into.
I've invested in every single year we've done something.
And so the return, I can what's the cycle? What's the cycle of return?
Well, it's
10 years, 2 to 5 years. Okay. And the worst that happens is I lose my $100. That's the absolute worst. Now that's what I like the most. Because I will tell you about my experience. A friend of mine came to me last year. He said, Rob, buy Bitcoin. And I'm like, it's something I don't see. Show me the Bitcoin.
You see why we need a cryptocurrency based on real estate?
But that's what I said. Having said that, though, Scott, because he said it, and I trusted him like I trust you, I went, you know what? He said to me, how much are you prepared to lose? He said, put in something you don't know. And I thought, okay. And I put in, I think, 15,000 rand. Because I thought, I don't want to lose 15,000. Anyone want to lose 15,000? Now, in my situation, do you think I could afford to lose 15,000? So I thought, you know what? Let me take a risk. So last year in January, I put put 15,000 rand into Bitcoin. How much is it worth to me? Today, now I still don't know if it's going to crash, but right now that's worth 200,000. Don't I wish I put the 100,000? So why I'm saying this is, here's what I appreciate, because even though you might not agree with what I just said, I know you're about to say. How do you feel about putting 1,000 rand into an investment that you might lose? Or in 5 years' time it could become more. Or in 2 years' time it could come more. So what I really appreciate the most is that you make it available to anyone. And that's what you want, is you want to be able to invest. And by the way, what did I tell you I made money in? I'm a dollar multi-millionaire. Most of my money has come from investing in. And I'm a dollar multi-millionaire. And I say that not to impress you, but to impress upon you. Do something. And if you can't invest $100, he's just giving you $100. So when you get the $100 that he's giving you, go and invest it. Because he's given it to you to invest. And why has he done it? He's told you honestly that when you invest, you're going to go, damn it, I'm putting another $100. So that, at least that could be a benefit to him. Is he going to win? Are you going to win? Yes. So it's a no-brainer risk. Is there something I'm not telling you?
Well, I think the only other thing is that even if you were to lose your $100, and I'm not talking about voucher, I'm talking about physical $100, what's the value of the education? So again, you're learning while doing. So my brother's a doctor, and up until now he's had all his money with the financial industry. And since about a year ago, he spoke to Michiel, I think it was about a year ago. No, sorry, it was Jacob. It was at my 40th birthday. And he's now only $5,000 invested, but he's in 4 projects, like in medical buildings. So he's learning while doing. And I think that's actually more valuable than the return you'll make. Particularly on the small amounts of money. It's not going to change your life, but the knowledge will change your life. Because I can promise you, to answer the 2 gentlemen's question about South African property, and I'm not giving you financial advice, I'm just telling you what my wife and I have done. After owning commercial properties in England, Australia, America, we sold all our South African houses except for our home in Knysna, because the returns didn't make sense. It had nothing to do with sentiment or Zuma or Malema. It's simple, like-for-like return. And it didn't, and the one's hassle-free and makes more money, and this one's lots of hassle and it doesn't make any money, it doesn't make any sense. Do you know what I mean? So that's what I mean by learn while doing. I can talk to you all day long, until you do it yourself, you won't know. And I'm going to, I always use the analogy, like none of you in this room learn to swim by reading a book or coming on a course. Eventually you've got to jump in the pool like that.
And I love what Robert Kiyosaki says in Rich Dad Poor Dad. You know the answer. Sometimes you win, sometimes you
lose it.
You don't know it!
I've heard that before.
I'll never forget reading Robert Kiyosaki's Rich Dad Poor Dad. Sometimes you win, sometimes you learn.
That's pretty cool.
You never lose. Because if you are learning, if you learn the lesson, you can't lose, because now you know next time. Like, how long does it take? Like I've told you guys that as human beings we learn in 2 ways. You learn, 6 o'clock is getting close. As human beings we learn in 2 ways. We learn through repetition. 3 times 3, 5 times 4, which is what I teach you in my part. Or you learn through what Tony calls a significant emotional event. Because you don't have to put your hand on a hot place 13 times to know, okay, I must learn. Like you put your hand on a hot plate once, you know, never doing that again! So here's the great thing about investment. Sometimes you win, sometimes you lose. So what have I learned from my investment in my personal home? It's not an investment. Next time I buy a property, I'll make sure I buy it in area. Now I know area. Even though everyone told me, like, we have like really area. So now I know. So sometimes you win, sometimes you learn. So guys, here's what's going to happen, because we have run out of time. Scott may or may not be able to stay. We possibly have a panel tomorrow.
Depends how much fun my wife's having at the 40th birthday. Whether I get it on a good side or bad side, is when I can stay.
So, you know what that means? I'll tell you later. So, but him and his team are in the back. You can come and chat to them if you have any questions. But tomorrow I'm hoping we can have a panel so you can ask anybody any questions, so you can learn about investments. It is 6 o'clock. But we never, hold on, we never, ever leave
Just before you
without
play,
being in a peak state.
just play it before you play the music. I want to say, I want to do one thing for you.
Yes.
And I think everyone in the room will remember where this comes from.
Okay. I need light.
Take me 30 seconds. Yeah, you got enough. Yeah.
Well, give me 1 second. Where's my laptop? What did you do with my laptop?
I didn't touch it.
Hey, agents! Where's my laptop?
Actually, I tell you what, dude, I have my phone.
Sorry, you do what you need to do. I just
What's on mine?
video. Hold on, video.
Oh, you want a video?
Who stole my laptop? Okay, you do what you need to do. If it's taken care of, I need you to open the laptop. Put my presentation. Sorry, you can't leave the room without being in a
This is for you, Roger, and I do this every single day. I did it in the mirror just before I came up on stage. I'm brilliant, I'm bright. I'm a radiant being of light. I'm an outstanding peak performer. I'm a dynamic mobile transformer.
Thank you, my brother. That means a lot, because I know when you came and spoke to me after my call as well. So guys, we never, ever leave a room without being in a peak state. I don't want you to just walk out and go, that was interesting. You have to get into a peak state. So I'm going to ask you, please stand up for a moment.